Are you ready to get started with WealthSimple Trade? In this video, I'm going to show you a step-by-step guide on how you can buy stocks and ETFs using WealthSimple Trade. I'll be using my own money to show you how easy and quickly you can get started with trading in the stock market. So the very first thing you have to do if you want to start investing with WealthSimple Trade is to open an account. So you go onto their website and hit Get Started. So once you click Get Started, it'll ask you to use an email and password and where you live in order to sign up. And signing up is quick and easy. Throughout the process, it might take about 5 to 10 minutes, and you can either use this using the desktop app like I have over here, or you can use the Android or iOS app to sign up. And from there, you'll have to enter your own information and agree to account documents in order to get started. What's the information you need? Well, you need to know your full name, your email address, a mailing address, a phone number, date of birth. You'll have to know your social insurance number and your employment information. There are no account minimums and there are no fees associated with opening an account. And in order to fund the account, you'll need to link a checking or savings account with your bank. For this video, I have already done that step. I have opened up my account from scratch. I have already funded it through my bank account and I have transferred $150 to get started with trading. A quick side note, I did open the account on a Friday. It took about 5 to 10 minutes using the desktop app, and it took about 3 days for the funds to transfer and get settled in. So today being a Wednesday, it took about 3 business days. So once you have your account and you're ready to go and you log in, you'll be greeted with this screen. Invest in cash, trade in crypto. So for this purpose, we're going to use trade in crypto. And once you log in, you'll get a notification that you can also use WealthSimple to file your own taxes. And if you're interested in doing your taxes using WealthSimple, I have a video that offers a step-by-step guide on how you can file your taxes for free online using WealthSimple Tax. It's a step-by-step guide in which I'll cover how to enter information from a T4 slip, a T4E, a T4A, how to show your rental information, medical, donations, RRSPs, and all that and more. So be sure to check out that video for my step-by-step guide. All right, so this is what the screen looks like once you get in. It'll tell you exactly how much money you have. And as I mentioned before, this account is from scratch. I have not used it yet. The only thing I've done is open the account and transfer some funds. So on your home screen, what you'll see is how much funds you'll have available. Once you already make some trades, you'll see the performance right here. And it actually tells you how much time you have to make trades until the stock market closes, which I think is kind of neat. On the side, you can manage a watch list. And I've already added some stocks and ETFs on this watch list for the purposes of this portfolio. And if you scroll further down, you'll get a live feed of what the Bitcoin prices and Ethereum trading in Canadian currency. This watch list was set up by default when I opened up my account. So I'll give you a quick overview on some of the options available. Here you have a drop down so you can switch between invest in cash and file your taxes. You have 3 options at top: portfolio, activity, and move funds. This is the portfolio stage. Let's see what activity looks like. Here you'll see all kinds of activities: buy, sells, deposit, withdrawals, dividends, refunds, transfers, etc. And you can see the only transaction I have done so far is deposit, which was done on February 19th. Today being February 24th, my funds have finally settled, and now I'm ready to get started with trading. The other option here is to move funds. If you want to quickly add funds or withdraw funds, you have options right here, or you can add another bank account. The other thing you can do is under profile, you have your settings, or you can just log out. And if you ever need help with your WealthSimple account, there's a neat little chat feature right here, which you can click and use to get some help with your account. The way I'm building this portfolio, it will be roughly half blue chip Canadian dividend stocks, and the other half will be ETFs. I will make all my purchases using the TSX. And the reason is that if you trade on any other stock exchange like the New York Stock Exchange, you will have to pay a 1.5% conversion fee when converting from Canadian to US dollars. So to avoid all this, for this portfolio at least, I'm going to be trading in Canadian funds. As the channel grows, I will continue to add funds in this portfolio, and you can watch me make every single trade. You can watch me make every single stock or ETF pick, and you can follow along for the ride. So my goal is to be completely transparent, share everything I do with regards to this portfolio in terms of tracking, funding, and making transactions. So I'll give you a little bit of information on why I chose to allocate between dividends and dividend stocks and growth ETFs. One, as an investor, I sort of like that comfort of dividends. There's just something, I don't know, warm and fuzzy about seeing your dividends come in day in and day out. The other piece is using the power of ETFs to get growth in your portfolio. When you're looking at total return, there's two pieces. You have the dividend piece and you have the growth piece. Growth coming from capital appreciation. And ETFs are a really cool way to get capital appreciation by holding a basket of various stocks. And when you get an ETF that trades on the TSX, you're not necessarily just buying Canadian stocks in that ETF. You can get exposure to stocks around the world without having to deal with any foreign conversion fees or foreign currencies. You simply buy the ETF on the TSX and it may hold a basket of US stocks, stocks from China, South Africa, Japan, you name it. And I will be covering each and every step along the way. So let's go ahead and start making our first trade. If you're not already aware, there is a new ETF that recently hit the Canadian market, and it's the first North American Bitcoin ETF. And yes, I will be investing in Bitcoin for this video. This Bitcoin ETF is by Purpose Investments, and it is the world's first Bitcoin ETF, meaning this ETF holds Bitcoin directly. And the cool thing is with this ETF, there's no wallet required. You're not looking for your digital wallets, keys, or converting fiat currency. It's physically settled and safely held in cold storage. It's simple to trade, and one of the cool features is that it's TFSA and RRSP eligible. So you can get the benefit of Bitcoin's growth tax-free in a TFSA or on a tax-deferred basis within an RRSP. This ETF went live a few days ago, and it already has $564 million of assets under management. It is one of the fastest growing ETFs right now. So a little bit more about the ETF. The ticker symbol is BTC.B for Canadian currency and BTCC.U for USD currency. There is a 1% management fee. And one of the benefits, again, you do get security because it trades on TSX, so it is regulated. It is convenience, TFSA and RRSP eligible. And of course, this is a high risk ETF. So if you're not comfortable with that type of risk, this may not be the fund for you. I'll also be covering dividend stocks and other ETFs that are a little bit lower on the risk rating profile. So this gives you a quick overview of how this ETF works. You buy the ETF either through a TFSA or an RRSP. The ETF purchases physical Bitcoin, and the investor, meaning you or me in this case, you own the ETF that owns Bitcoin in comparison to directly buying Bitcoin. Because if you directly buy Bitcoin, it can't go in a TFSA or an RRSP. So when you're buying and selling Bitcoin directly, you'll have to pay capital gains. The other piece is that when you buy Bitcoin directly, you also have to open an account with another exchange or another marketplace. So with this ETF, you're skipping all that. You got the comfort of buying an ETF, and you still get exposure to Bitcoin's growth. Although it can crash and you may lose some money, but that's the risk you have to take when it comes to investing. So you'll notice here that Bitcoin has gone up, but again, it has gone up, gone down, gone up, gone down, and then really gone up. This doesn't mean that Bitcoin will continue to go up. Obviously, at this point, it can come crashing down, but that's where you have to make a decision of how much money you're willing to risk with Bitcoin for that growth. Now, before I actually make the first purchase, I just want to show you a quick feature on WealthSimple on how you can actually create your own trade watch list. Just enter any symbol here. That's, for example, I'm going to do RY for Royal Bank. Pops up, and you can go ahead and add or remove it from the watch list. Okay, so now let's go ahead and make our first purchase. I'm going to scroll down until I find BTCC. There it is. And you can see the price is currently at $9.42 Canadian. It's already up 4% in the past day. You have options to see the past week performance, the past month, 3 months, 1 year, and 5 years. Because this is a relatively new fund, only having launched in the last few days, there's only so much worth of data that you can see. So out of my $150 that I have available to trade, I'm only interested in investing about $50 of Bitcoin. Why 50? To be honest with you, I didn't really see Bitcoin as an alternative investment option before this ETF. I didn't want the hassle of doing the whole cold storage, opening an account with a different exchange, and going through all that hassle. And to be honest with you, the main reason I'm going into Bitcoin is just to get the exposure. So if it grows, I get to go along for the ride. And if it doesn't really grow, I'm only putting $50 at risk, so not a big amount. So let's go ahead and drop in $50 into Bitcoin. 3, 4, 5, and I'm ready to buy. Oh, the other thing I should mention that when you are looking at any stock or any ETF, You do get some market details about the fund. So it'll show your open, high, low, market cap, PE ratio available, the 52-week high, 52-week low, the volume, how many shares or units are being exchanged, bought and sold on the exchange, the yield if it has one, and which exchange it's listed on. You'll also get a quick blurb on the description of the investment. Okay, now without further ado, let's go ahead and buy Bitcoin. When you place a market order, an attempt will be made to fill it at the best available price. Keep in mind that market prices are constantly changing, and quotes you see in the app are delayed by 15 minutes. This means your order may fill at a different price from when you placed your order. So the price it's showing right now is at $9.47. So let's see what it actually settles at. Let's go ahead and do next. We may apply a 5% ceiling to a market buy orders. So if the current stock price is 5% higher or more than the price shown when you place an order, your order may not be filled. So I guess it offers a surge protection almost. So if you're buying a stock or an ETF and almost immediately it surges by more than 5%, you do get a little bit of shelter. You're not sticker shocked. So for example, I was buying a fund for $10 and for, I don't know, in that 15-minute period, it shoots up like 50%. So that way you do get some protection. I'm going to continue. Okay, 5 shares of this Bitcoin ETF at $47.35. Let's place the order. All right, success. Your market buy has been filled. Let's go back to my portfolio, and what does that look like? Already, I guess I've already seen a 20-cent increase on my investment. And if I go deeper into this, what do we see right here? Okay, so I've already made 20 cents in the last, 2 minutes? And I have available another $102 to trade with. And here we can see the price of the Bitcoin, my total value, and my all-time return. Pretty neat. So that's the first trade. I still have $102 left to use. The next item on my list is another ETF, which goes by ZINN. This is a BMO MSCI Innovation Index ETF. This ETF is also pretty brand new, having launched only January of 2021. Let's look into a little bit more details about this ETF. This Innovation Index ETF has been designed to replicate to the extent possible the performance of the MSCI Innovation Index net of expenses. The fund captures mega trends by investing in stocks that have a high exposure to the following disruptive innovation themes: autonomous technology and industrial, genomic, fintech, and next generation internet. Now, if this sounds familiar to you, and that's because I actually covered a similar fund that has the exact same themes, and that's ARK Invest. If you're not familiar with ARK Invest, check out my video to learn more about ARK Invest and the funds within that portfolio. This fund, ZIN, is actually designed in collaboration with ARK Invest. So ARK Invest trades on the New York Stock Exchange for about $140 per unit. And this, to me, is an alternative that trades on the TSX. So if I don't want to invest in ARK directly, which is on the New York Stock Exchange and trading in US dollars, I can actually use ZIN as an alternative. The other alternative available in the Canadian marketplace for ARK is a fund known as EARK, which is the Emerge ARK Global Disruptive Innovation ETF. This fund, on the other hand, has the exact same holdings that ARK has. It's just the Canadian version, so it trades on the TSX. But because it's just a replica of the US fund, the management fee for this ETF is 80 basis points, much higher than the original ARK fund on the New York Stock Exchange, which is roughly between 70 to 80 basis points in total. The MER for this is roughly 1.7%. So you're paying almost double in management fees just to own the Canadian version. Alternatively, you can own ZIN. I'm going to go through the holdings. It has 238 holdings, meaning 238 different companies of stocks in this one ETF. The top holdings include Visa, Amazon, Alibaba, MasterCard, PayPal, etc. Compare that to EARK, where the top holdings are Tesla, Roku, Teladoc Health, Square, and CRISPR Therapeutics. That doesn't mean you're not going to get exposure of these entities if you invest in ZIN. So if I expand, you'll see that there are some overlaps. You get Teladoc Health, you do get Tesla, you get exposure to Facebook, you get Square. So there is some overlap. The difference is it's not in the same stacking order. And if I look at more details about this fund, it has about $9 million in assets under management. It trades in Canadian currency. It's roughly about $30 per unit. and it has a MER ratio of 45 basis points. So almost, 4 times less than EARK. And to me, this is actually a major point because I can't control the growth of any ETF. You're going to see different growth rates. You're going to see different rates of returns on any ETF. But what I can't control is the amount of fees I'm willing to pay for that exposure. And the lower the fees are, the more money goes to your pocket. So that's why I'm choosing to go with Zin. It has a much lower expense ratio, and I get exposure in these emerging themes. So let's go ahead and make that trade. And at this point, I'm more interested in buying just one unit. So let's go ahead and buy Zin. Same thing, how the market works. Next. Sure, let's continue. Place order. Done. Now I have about $71 to use. And going back to my portfolio, I have 2 positions and my balance is $150.10. So not much has changed since I made my first investments. Now that I've covered ETFs, I'm moving on to blue chip Canadian dividend stocks. I'm sure some of you will be very interested in that. The first dividend stock I'm going to go with is a name you're likely familiar with, and that is TELUS. I actually covered a spin-off of TELUS International, in a separate video on this channel. So if you are interested in TELUS International, make sure to check out that video. So why TELUS? TELUS, Bell, and Rogers pretty much control the entire Canadian landscape when it comes to telecommunications. TELUS is also a dividend grower, and it has also seen capital appreciation along the way. So in the last 5 years, it has grown 30%, plus you got paid dividends to go along for that ride. So when it comes to dividend stocks, I'm looking for a balance between capital appreciation and continued dividend growth. And if you buy into TELUS, you're not just getting exposure to telecommunications. TELUS is also beefing up in other areas. They're looking at digital solutions. They're looking at agriculture. They're looking at telehealth. These are some very high growth areas. And the cool thing about TELUS itself, it has grown its dividend for the last 17 years. And the target growth for the next few years is between 7 to 10% dividend growth. So since 2004, you were getting a 5-cent dividend with TELUS back in 2004, 2005. And since then, it has continuously grown its dividends throughout the years, throughout the Great Recession, throughout the pandemic, throughout the oil crash. And now you're getting a dividend of about 31 cents for every share you hold. It has a market cap of roughly $33 billion. It has a PE ratio of 27.21, and it has a dividend yield of roughly 4.81%. Looking at some financial statistics, it has a profit margin of 7.8%, so a healthy profit margin. It has an operating margin of 17%, so you can see that the profit margins are healthy when it comes to paying its dividend. It has a good return on assets and return on equity. It has revenue of $15.34 billion, meaning revenue per share at 12.03. Not only does it have a $15 billion in revenue, but it's a growing revenue at 6% year over year. It has a very healthy EBITDA of $4.71 billion, and its operating cash flow is at $4.57 billion. Looking at the annual financials, you can see that the company has grown its financials. So that's from 2017, 13.2 million, going to 14 million, 14.5 million, and 2020 at 15.3 million. So it's a healthy growing revenue stream. And the other piece you want to see is a profit growing, right? Because if revenue is growing, but expenses are growing faster than revenue, that's not really a good sign. You want to see a healthy growing profit. So the profit has grown from 7.3 million to 9.1 million in 2020. The other statement that I like to look at is a cash flow statement, which tells you how effectively TELUS is managing its cash. So you start off with net income. You have some adjustments for depreciation, accounts receivable, inventory. These are all non-cash related adjustments you have to make on the cash flow. So you can get to a line item called net cash provided by operations. And here you can see how TELUS is using its cash. It's making investments in property, plant, and equipment. It has some investment. It has some other small investing activities. It is paying down debt. It issued some common stock. And it's been paying dividends along the way. And the one cool line you want to focus on is operating cash flow. You want to see, is this cash flow growing so it can continue paying dividends and grow that dividend for the years to come. So I'm going to go ahead and buy my 1 share of TELUS. And what I want to highlight is that when it comes to buying ETFs and stocks, there's no difference when it comes to making a purchase. Stocks is one company. ETFs is just a basket of companies. So it really depends on what you're looking for. Do you want to buy an entire basket, or do you want to buy a single package stock? For this portfolio, I'm going the hybrid route, and doing both ETFs and blue chip dividend stocks. Let's go ahead and buy TELUS. Next. Yes, and continue. Place order. And there you go. And this is what's really cool about WealthSimple Trade. I'm buying 1 share of TELUS. I'm buying 1 share of Zin, and there is no commission fees. There's no trading fees. So I can buy as little as 1 share at a time and continue to grow my portfolio. And this should be very important to you, because if you have very little capital to work with, you don't want that capital getting eaten away by paying commissions and trading fees. Some of the big banks, they charge what, $10 per trade. So if I were to buy TELUS with one of the big banks, not only would I have to pay $25 to buy the share of TELUS, but I would also have to pay $10 for this share. So that means my total cost will be $35. So for me to see growth on this one transaction, TELUS would have to grow past $35 per share for me to actually see any profit. So that's why with a platform like WealthSimple Trade, you can buy as little as 1 share and not pay any fees. Okay, let's see how the portfolio is doing. Well, looks like my performance is relatively the same. I still have 6 cents over my initial investment. I now have 3 positions. And now I have $47.09 to continue to transact with. What's next on my list is another blue chip dividend stock I'm sure you're familiar with, Algonquin. And the reason I chose Algonquin Power and Utilities, because when I'm thinking of good renewable businesses in Canada, Algonquin is one of the first ones that comes in mind. The company currently has about 1,600 megawatts of projects under construction, and it's looking to add another 850 megawatts of projects in the pipeline. So the question is, can they continue to grow? That's what the question is, can Algonquin grow? And with the world moving closer and closer to green energy by the day, there's a lot of opportunities for players like Algonquin to continue to grow their portfolio. As governments will offer tax incentives, there'll be positive marketing for the companies that make more and more greener energy plays. Because I'm looking to Algonquin as a dividend player, one thing I want to see is, has it been growing that dividend? And if we look at this, since 2010, it had about a 6-cent dividend per share, and it has been growing consistently to about 19.21 cents per share. It has a market cap of about $12 billion. It has a PE ratio about 25.11, and you're looking at about a 3.77 yield. When it comes to dividend stocks, I'm not just interested in high yield. I'm looking to see if it has a reasonable yield and can it continue to grow that dividend. Because for me, I don't want to buy into a high yield dividend and then you have the risk of that dividend getting cut, or that dividend just doesn't grow. So you're just stuck with a flat dividend year in and year out. For me, I want to see growth, not only in capital appreciation, but I also want to see growth in dividend. And in my opinion, you get just that with Algonquin. It has a very healthy profit margin at 27.75%, a very healthy operating margin at 21%, a healthy return on assets and equity. It has a revenue of $1.62 billion, and it has grown at 2.9% year over year. It has gross profit of $709 million and an EBITDA of $651 million. And since 2017, it has continued to grow its top line revenue, going from 1.5 to 1.6 in 2018. And that revenue did decline a little bit in 2019, but its gross profit has also been growing along the way. In terms of cash flow, how effectively is it using its cash? It's making investments in property, plant, and equipment. It's making investments in acquisitions. It's repaying debt. It's issued more common stock, and it is paying dividends along the way. So for me, Algonquin is a healthy, growing company. It has assets across North America. It's growing in the renewable energy space, and it's also a regulated utility company. It's making investments in hydroelectric, wind, thermal, and solar power. And the renewable energy space has been good to investors. In my last video, I actually covered ETFs that follow the renewable energy space. So if you're looking for ETFs that track the space, you can check that video out as well. So let's go ahead and make that purchase of Algonquin. So since I only have $47 left to work with, and this is trading about $20 a share, I'm going to go ahead and buy 2 shares. Let's go ahead and buy AQN. Next. And you know what? I'm actually going to say, don't show this again. Place order. And that's it. 2 shares of AQN. Let's go back to the portfolio. All right, there you have it. I have made the investments I was looking to for the purpose of this video, having purchased 2 ETFs and 2 different stocks. So let's go ahead and see what I've done. So you'll see right here, I have 2 shares of Algonquin, 5 shares of BTCC, the Bitcoin ETF, 1 share of TELUS, and 1 share of Zen, the Innovation Index ETF. And I have $6.81 left to trade with. And I'm going to leave that as is for now. And over the course of this channel, I'm going to be adding more funds so you can see exactly what kind of trades I make. And not only that, but you can actually see the performance of this portfolio as the channel continues to grow. So I hope you've enjoyed this video and found how easy it can be to invest with WealthSimple Trade, whether you're buying ETFs or you're buying stocks. And you can get started with as little as $1 if you want to fund your account, although you won't be able to buy much with it unless you're looking at penny stocks, but that's a whole nother story. Before ending the video, there are 2 things I wanted to quickly talk about, and one is taxes on stocks. The reason I chose blue chip dividend stocks is that dividends are taxed favorably outside of your TFSA and RSP in Canada. So if we're looking at the combined federal and Ontario tax brackets, this is a table you want to see when it comes to paying tax on dividends. So if we're looking at the tax bracket of income between $98,000 and $150,000, this is the line you want to follow. Other income is essentially where you pay tax on your salary. You'll pay tax on interest. You'll pay tax on rental income. You'll pay tax on dividends that are paid by foreign companies. This is where this goes. Tax on capital gains is 21%, and taxes on Canadian dividends paid by public corporations is 25%. You have to pay 43% tax for every dollar you earn if you are within this bracket at 43%. Capital gains at 21% and dividends at 25%. So it can be a very tax effective strategy if you are looking to invest outside your TFSA and RSP. The other piece is, should you be investing in the stock market when the market is at an all-time high? So right now, you just saw in this video, I made investments in various stocks and ETFs. Even the market today is near an all-time high. So should you be worried? The thing is that the market will be at an all-time high roughly 70 to 75% of the time. And you actually want it to be at an all-time high. So for example, if we're looking at the S&P 500 index, you can see that since 1981, it was at 131. It has since grown and grown and grown. And that's exactly what you want as an investor. You want your investments to grow. And you're going to see that growth through time. So sure, the S&P is at 3,900 today, but it could be at 4,000 tomorrow. It may not be at 4,000. It can drop down, but that's the risk with investing. Likely, as time goes on, it will probably cross 4,000. It'll cross 5,000, maybe 6,000, 7,000, and so on and so on and so on. So don't be worried about investing at an all-time high. Just as long as you're comfortable with the risk and reward ratio, you understand that yes, you can make money, but you can also lose money. But as a long-term investor, you will make money on long-term investments. And for this portfolio, you'll see that this will be mainly a buy and hold portfolio. I'm not looking to make quick trades along every day. That's not the purpose. The purpose is to grow this portfolio with healthy blue chip dividend stocks and ETFs so I can get both healthy dividends along the way and capital appreciation. And if you're worried about investing, well, you can follow along and you'll see that I'm investing right alongside you. So we're both in this together, whether the markets go up, whether the markets go down. And if you want, you can invest in the same items I've chosen to invest in. So really in it together then. I have links to promo codes for various discounts and sign-up bonuses. Not only do you get to support the channel, but you get a nice bonus or discount along the way. If you have questions for me, feedback on this video, or maybe you have ideas on future content, I'd love to hear about them in the comments below. And while you're at it, make sure you hit that like and subscribe button. So that's it for this video. I'll catch you guys in the next one.